Well, the gap higher back in the early new year above an 11-year-old major resistance area was just as important as what we're seeing now, and that is a retest of that area again. And this is quite critical indeed. We've had a very strong push to the upside here, especially off those December lows. Very impulsive indeed. We've labelled that either as an intermediate wave 3 or the minor degree wave 3. Certainly the 1.618 extension target here has almost been tagged on the NASDAQ, but that's the only index where that has been achieved globally. So it certainly has been an outperformer compared to a lot of the other global indices that we've been covering. So just short on that extension target. We've now got a very clear ABC run to the downside here, and we're looking at retesting this support area. Now this support area is the old resistance area in an ideal world. So what we're looking at is for that to revert to support. It's in the 2870 to 2890 area. Very interestingly, as mentioned, we've got this little gap here at 2868, so almost to the tick on the lower boundaries of that support zone. Wouldn't be surprised to see that potentially filled, but if we did get a gap down here and that 2868 gap did fill, we'll certainly want to see a nice intraday strong close on that, and ideally on some good volume as well. So here we are at the moment. We're right in the zone. We've got wave A versus wave C equality on this nice little ABC move to the downside, nice and symmetrical, and we also have some nice price confluence here as well as far as the 38.2% retracement. Now they're all around 28.98 and 28.97, so now tagged on this little run here, so we are right in the zone. Not saying we can't go a little bit lower, and as is prices want, we may still get this gap fill back here on this gap higher above the major resistance area that was in place for over 11 years. So to get that little gap fill and a very positive response from that, then I'd still be very, very confident that we're going to get another run to the upside here and a push well above the recent highs and beyond up to the 3300 level as a minimum. So that's what we're looking for here, but we really do need this to hold. It is quite critical. Price is quite oversold from where it presently sits, but we do need to see this reverted support area, this old major resistance area, hold prices above it, and that means we really do need to see that 2870 to 2890 area hold, and then for prices to reverse from there. So that's where we're looking at the moment. Certainly a red flag if we get a momentum driven drive underneath this 2870 area. That would not be good for the analysis. It doesn't mean longer term that we're still not going to look higher, but it would start putting the immediate bullish analysis under a critical juncture. So we'll see how things travel here. Nice ABC run at the moment. I'm still liking what I'm seeing here, and still looking for higher short to medium term.